Welcome back to Earnings Central. Indian Overseas Bank, or IOB, is one of the first PSU banks to announce its second quarter numbers, and it has set a standard that should be very difficult to beat. An absolute standout set. Contrary to expectation, margins have risen by 17 basis points over the last quarter to 3.21%. Credit cost, or the money you set aside for bad loans, has actually fallen sharply by 31 basis points, and now credit cost is just 1.06%. Profits are up 58% year-on-year. Advances are up 21% year-on-year. Only deposit growth is a tiny disappointment at 9%. To take us through whether these three themes, loan growth, margins and low NPAs are sustainable in the coming quarters, I have with me the Managing Director and CEO, Ajay Kumar Srivastava. Mr. Srivastava, thank you very much indeed for joining us. Festive greetings to you for Diwali, and congratulations on a good set. Let me start with the margins. Most banks are going to continue to suffer a curb in margins because of the repo rate cuts. How come it hasn't affected you, or how come your margins have already bottomed out?
Yeah, in fact, reduction in repo rate was anticipated, and almost 9 months before, we started proactively to address the concern.
Okay.
It's not the numbers which we have shown and the increase in margin NIM.
Okay.
It's not overnight, over 9 months of meticulous planning.
Okay.
And successful implementation of the strategy has resulted in that. And this 3.21 also, that is global. If we take domestic, it's 3.35.
Oh.
Quarter on quarter and year on year, we have been able to protect margin. June was, of course, we have not been able to do.
Okay.
But increase in interest income, increase in quality credit, and the more importantly, the focus on good pricing.
Okay.
We have been very selective and lending to those entities only where pricing is good and quality is good.
That's very good to hear. There will be possibly one more rate cut in December or February. That is the expectation, because inflation is surprising on the downside. The governor himself said in the press conference that there is space to support growth. If that is a cut, what is your guidance on margins? Will you continue to rise or keep your domestic margin stable at 3.35 at least?
Yeah, we are pretty sure that it will be around that 3.35, between 3.32 to 3.35. Plans are already in place. About 9 months before, our total credit portfolio, 60% of that portfolio was repo linked, external benchmark linked. And over 9 months, we have very consistently shifted to MCLR based lending. And it's not as if that
now what is the percentage? Now what is the percentage of repo and MCLR?
9 months before it was around 60%. Now it is around 46%.
Okay.
Last 9 months, whatever we have lent, that mostly we have lent on MCLR based.
Okay.
And it's not as if the impact of repo cut will not affect MCLR, but as we all know that it happens with a lag.
Yes.
And accordingly, deposit rates also in between get repriced.
Oh.
So the margin we have been able to protect, and going forward also, if any rate cut happens, we are pretty sure that we will be able to maintain at that level.
Okay. What about deposit growth? I mean, that is the only fault I can find in an otherwise perfect set of numbers. Your advances are growing at 21%. Your margins have grown your deposits have grown at 9.1%. So the credit deposit ratio has gone up a bit towards 80. You think you will be able to, up your deposit growth? What is the target?
Yes, see, the growth in deposit has to be seen in one particular factor, that the composition of deposit at IOB, it's not bulk deposit based.
Okay.
If you look at the numbers out of the total bulk share in total deposit is only 5%, 17,000 crores.
Okay.
Out of a total base of 3,30,000 crores. Okay. Meaning thereby that 95% is CASA and retail term deposit, which is very stable.
Okay.
If we want to increase deposit, of course, every day we can go for aggressively for bulk deposit. And that deposit growth also can be shown at 13-14%. But very consciously, we are not focusing on that. The focus is on retail and CASA and that organic growth. And without any additional focus on bulk, we have been able to grow at 9%. Okay. CASA is also growing year on year. If you see, CASA has also grown. Okay. And then we are pretty satisfied with that.
Okay. Your retail advances, there is a lot to agriculture, and of course other retail. Would you worry about any likelihood of slippages? What is your unsecured loan percentage as well? We don't have that number.
We don't do unsecured lending as much. It will be less than 1% only if we look at the total portfolio size. And last 2 years, if you see every quarter year, the slippage ratio has been around 0.11, 0.12 like that. We have been one of the best performers as far as slippages control is concerned and slippage ratio is concerned. This quarter also it stands at 0.11 only.
Okay.
And we do not see any stress whether in agriculture book or MSME book as a product as a whole. Individual cases may be there, but systemically we do not see any stress.
Okay. You indicated that you all are moving to the new tax regime by the third or the fourth quarter. Can you tell us what that will mean to your ROE or earnings? What will be the impact on the P&L and balance sheet?
Yeah, P&L, once we shift there, in fact, we have delayed the shifting to new tax regime only because we wanted to protect P&L. We never wanted that it's going to adversely affect that. So we delayed it. Now we are in a position where in Q3 or Q4, even if we shift to a new tax regime, there will not be any impact on P&L and we will be able to smoothly shift to new tax regime.
Oh.
That is why it has been delayed by almost 1 year. But Q3, I think most probably will be able to do that.
Will there be some positive impact on ROA or something? I mean, as it is, you've done very well in your ROA from 82 last year, 82 basis points. You've gone up to 1.2. That's a very big jump in ROA. Will that be protected?
Yeah, it will be protected, and it will further improve also.
Okay. Again, I'm trying to find some faults in your results, which are otherwise very good. EPS growth, that's the one that disappoints. I mean, if you look at your price, given the earnings, which is less than a rupee, your EPS, your PE ratio looks very high at about 60 times. What is the EPS forecast you can give? I mean, your profit is doing well. That's why I'm asking.
Yeah, it's very difficult to comment on that. What I can say to this is that our job is to give good numbers, generate good profit, generate good numbers, a good balance sheet we are supposed to give, which we have been doing consistently over the last 2.5 years.
Did you hear anything? Yeah, sorry. Go ahead, please.
And beyond that, we do not have any control on other factors. That is what I wanted to say.
Okay. No, I'm just saying if there is any EPS forecast or guidance that you have in mind.
No, we have not thought of that.
Okay, Mr. Srivastava, did you hear anything about consolidation? I mean, when you all are doing so well, the only other bank, PSU Bank, which came with numbers is Bank of Maharashtra. Again, it was a very good set of numbers. So, any consolidation talk from the ministry?
Officially, we have not heard anything from any of the authorities. We are reading in newspapers only.
Okay.
But officially, there is no communication.
Okay. What's your sense about what will be your growth engine in the second half? Will it be retail? Which part of retail? Will agri continue? It's a little worrying. Agri sometimes throws up bad loans, especially in the first quarter. So what is your engine of growth and where are your worries?
If you look at my total credit portfolio, retail, agri, MSME and corporate, all are equally distributed, around 20 to 25%. So there is no special focus on any particular area, I will say, depending on the pricing and the borrower type and financials of the borrowing company. Okay. We are taking a call. We have grown in retail also, MSME also, agri also, and corporate. We have been, I will say that growth is almost flat in corporate. Okay. And mainly because of pricing issues, because corporates are having other sources also of getting funds. And because of pricing, we are not very aggressive on corporates. But retail,
I can see your corporate loans are falling. It's down 3% year on year. Just a final question, any MFI loans?
Around 1,400 crores of exposure we are having. And out of that, NPA percentage is 2% only. Okay. And otherwise, the remaining portfolio of MFI, right now, it's working fine. Okay. And all are regular and standard.
All right. We'll have to leave it at that. Mr. Srivastava, once again, many congratulations for a great set of numbers and a very happy Diwali to everyone in your team.
Thank you. Thanks a lot. Happy Diwali to you also. Thank you.
Thank you. We have to wrap up on that note. And from all of us, the entire Bazaar team, a very happy Diwali to all of you viewers. Take a break. 4-5 karega.